Hi, and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about negotiating seller paid closing costs on prepaids or seller concessions. But before I do that, let me start a new series at the beginning of all videos where I'm going to be telling everybody every single time to stop paying your rent with cash, right? Stop it, because if we ever are in a position where we have to prove that you've made 12 months of on-time rent payment, we cannot. We have to go back to your bank statements and we have to be able to prove it. So write a personal check if humanly possible. That way the canceled check will show up and we can prove that you paid rent on time every month. If your landlord will not accept a personal check, get a cashier's check for the specific amount of your rent. Make a copy of the check, the cashier's check, before you hand it over. That way you have a copy of the check and we can show where it came out of the bank statement, out of the bank account. Okay? If you have that for 12 months, you should be able to buy a home just about anybody. So keep that in mind. Moving on. All right, seller pay closing costs. All right, it's technically closing costs and prepaids. Here's a video about that. All right, how do we get the sellers to pay for this? Well, most of the time you're going to negotiate that at the time of the purchase agreement. So when you are making an offer on the home, your realtor is going to help do that. Now, where I see some mistakes that come in that is depending on the market and not understanding the loan program. So first and foremost, you have to know the difference between loan programs. So on a conventional loan, the maximum seller contributions is 3%. So on a $200,000 home, that's $6,000. That should come pretty close to paying for most of the closing costs and prepaids for most homes, depending on what state that you're in. If you're buying a $100,000 house, the maximum that they can contribute on a conventional loan is $3,000. It's not going to cover all your closing costs and prepaids. It's just not going to make it. So you have to know that. So if you need the seller to pay all of your closing costs and prepaids, you may have to go into a government loan. Government loans, the maximum they can do is 6%. So on a $100,000 home, that's $6,000. Now if we take that to a $200,000 home, that's $12,000, right? So it makes a big difference on how much that a seller can contribute to your closing costs and prepaids. All right, so keep that in mind when you're starting that negotiation. This is another reason why getting pre-approved, pre-qualified at the very beginning before you go and make an offer is so critical. So you make an offer on a home, you have the sellers pay your closing costs and prepaids, you're buying a $100,000 home, and then next thing you know, they can't come up and they can't pay for all your seller paid closing costs and prepaids. They'll just max out at 3%, right? And then you're short. Now, if you don't have that money, that's a big problem. You need to get a pre-qualified before you start looking for a home. All right, set that aside. Now, how does this actually work? Well, another mistake that I see is that sellers will, or buyers and sellers will negotiate the sales price, and then let's take that $200,000 example. They'll negotiate $200,000 sales price, and then after that they'll want to tack on the closing costs. So if you negotiated a $200,000 home and then later on you find out, hey, I actually want the sellers to pay for my closing costs and prepaids, and then you do an addendum and tack that on top of it. It depends on the lender and the underwriter how they view that, and the loan product. Depending on which it is, sometimes an underwriter may see that as an inducement to purchase. So if you know you're going to need seller pay closing costs and prepaids, put that into the contract up front. Try not to do the addendum afterwards. I have had addendums afterwards fly through without an issue. And I have had addendums afterwards where the underwriters like, no, that won't work because it's an inducement to purchase. So keep that in mind. Avoid any question. Just have it put into the sales contract from the very beginning. Now, depending on where you are in the country is how some of that negotiation goes. All right. So I see it all the time where they'll negotiate that sales price, especially in Eastern Kentucky. They'll negotiate the sales price, and then after that is done, they will add in the closing costs and prepaids. So in that example, if it's a conventional loan, let's say it's $6,000, then they would raise the sales price to $206,000, with the sellers paying $6,000 in closing costs and prepaids. And that's fine. That will work. Now, if you are in a hot market, you're in a city where right now houses are just flying off the market. It's very rare where you're coming in and you're lowballing an offer, right? And when it happens, you're just not competitive, right? And that's where your real estate agents will actually help a lot. But let me give you a little tip. You come in and you just lowball an offer, your real estate agents will make that offer. But if they're giving you the advice that, hey, that's going to be a low offer, you need to come a little bit higher, you need to listen to them because they're the experts on how to negotiate these closing costs and prepaids. But you add it in there up front. But understand that if you're in a hot market, and let's say that I'm asking for $200,000 to sell my home, and you come at me and say, okay, hey, I'm going to offer you $200,000 if you pay $6,000 of my closing costs. Well, I'm going to net $194,000, right? Well, that's not a very strong offer when I've got somebody else that's going to pay their own closing costs or prepaids, because that means I'm going to net the full $200,000, right? If you want me to pay your closing costs or prepaids, you would have to offer more than the sales price. So you'd have to go $206,000, and then I'd pay $6,000 of your closing costs. Then I would net $200,000, right? That's how you can be competitive. Now, if you're in this market where there's escalations, depending on where the selling agent priced it, you could be outbid in a millisecond. They won't even, you won't have a strong offer at all. They won't even look at it. So you need to keep that in mind too. If you're in a super hot market, you might need to be prepared to come with your own closing costs or prepaids to get an accepted offer. So keep that in mind. Now, if you offered higher than the asking price, it again depends upon how did the selling agent list it. Okay, so if the selling agent listed it at top dollar, there may not be enough room. It may not appraise for $206,000. So if you're trying to get the seller to pay your closing costs, and you're saying, okay, in that instance, we'll say $206,000. If you pay $6,000 my closing costs, what if it doesn't appraise for $206,000? Let's say it only appraises for $202,000. Well, now you're $4,000 short. So now you've got different choices. A lender is only going to lend on the sales price or the appraised value, whichever is lower. So if in that example, if you're asking for $206,000, that's the sales price, and it came in at $202,000, you're $4,000 short. They're only going to lend on $202,000. So now you've got one of three choices. One, you can walk away. Two, make the sales price the appraised value, and then see if the seller will help with the other $4,000 of closing costs. May or may not. Or you got to bring the additional $4,000. So those are really the choices that you have, right? And again, your realtor will help you there. Having said all of that, if you went with a government loan, same scenario, but you can actually have more closing costs and prepaids paid by the seller because it's 6%. The question is, how much are your closing costs or prepaids? And this is another reason why it's critical that you get pre-qualified, because your loan officer should be able to tell you pretty tight what the expected closing costs and prepaids will be. There's a couple things that we don't know, because you shop for homeowners insurance or property taxes should be pretty tight depending on where you are. We can dial it in pretty good. But there's a couple items that will be off a little bit, but a good experienced loan officer will know how to take that into account and be able to give you a number that will allow you to come to the table without paying much closing costs or prepaids. And the lender's also the loan officer is also going to keep in mind your assets. All right, we're going to know what you're supposed to have in the bank, and we're going to know kind of where to put that to make sure that you have enough money at the end of the process to close on this loan. All right. Okay, so keep all those things in mind. It is super critical that you know those numbers before you go in, and that you have a plan, and your real estate agent is going to help you there, and your loan officer should be helping your real estate agent so that they know the numbers, because they don't know your finances as well as your loan officer does. And you want to ensure that you go in there making a strong offer, but making an offer that you can close. All right. Okay, I hope all of this helps. If you have any questions, drop a question below. I will answer it as soon as humanly possible. And until next time, it's all for one and one for all.